Just fixed income market was relatively quiet today as the market comes to grips with a new trading platform. Joining me to review trading activity in the build-up to the crucial MPC meeting next week is Leke Sule, a fixed income trader at Mansard Investment. He of course joins me in the studios. Leke, thank you very much for joining us. I'm sure you're keeping your eyes very close to that MPC decision. But let's first of all start by discussing this new trading platform that has been launched and what it means for the market. I hear it's likely to drive a lot more transparency, and that could impact pricing going forward.
Yes, pretty much. The new e-bond platform, Bloomberg, actually went live today. It's actually more transparent in that, unlike ICAP and Reuters, you can easily see the volumes traded. Dealers can request for quotes through RFQ to other banks. Also, banks are being forced to quote. The fixed 25 basis point spread is already enforced,
right.
And the benchmark bonds as well. They can easily put their bid and ask spreads, the bid price and the offer price.
Yeah.
It's more transparent because foreign investors, other institutional investors can easily see what markets are quoting. Unlike for Reuters, where the market was quite closed, and ICAP that was just really accessible to banks themselves. So with the new e-bond platform, we can easily do analysis. We can see historicals of where securities have traded. Although the trading was pretty much muted today because dealers are still trying to get used to the new platform.
Yeah.
But we think as time goes on, dealers are going to get more used to it.
All right.
Of course.
Do you think this could bring a new wave of creative trades, being able to see what the volumes are like that investors couldn't do before? Do you think that could bring some new dynamism to trading strategies, perhaps?
Yes, definitely. We will likely see thinner spreads because as more dealers put in their bid-ask prices, we actually expect to see a lot of we really expect to see very, very thin spreads. Yeah. As dealers put in their prices, markets actually gets more reflective of firm practices. As regards to foreign investors and other institutional investors, we believe they'll be better served because dealers wouldn't just be giving quotes off their heads, unlike right. what we currently see.
Right. So that transparency, of course, is good for the markets. But let's now talk about the MPC. Everyone's eye firmly focused on that meeting for several reasons. We know, of course, it's the first since the suspension of Sanusi Lamido Sanusi. So many saying it's going to be a big test for the MPC to get a sense of how institutionalized that change is. What are your broad expectations? What are you expecting from that meeting?
Yeah, we don't really expect much. The market is already pricing an increase of 25 basis points on 25% from 75 on public sector CRR. We expect that to happen. We should also be mindful of the fact that the market is very illiquid right now. We're seeing OBB rates at 17%, overnight at 18%.
Yeah, but that's only for now, right?
Yes.
We know that those FAC allocations will come in, and when they do, the market becomes yes. a little more liquid.
And of course, we have bond maturing tomorrow, about 320 billion. So yeah. the market is going to be very liquid. So it will be pretty easy for the CBN to implement 100% CRR on public sector funds. So we expect that to really bring about more efficiency in the disintermediation we've been seeing in public right. sector funds. As well, we believe that in the MPC meeting, a lot of dealers are actually expecting a devaluation of the Naira. We think that could be pretty quick. We don't really expect CBN to touch the FX band, unless all other venues have been exhausted, like increasing CRR on private sector deposits as well. So we don't really see a devaluation of the Naira right now. Fine reserves are dwindling, but we still think CBN has shown more commitment to defending Naira. Also, you know, CBN introduced forwards, yeah. interbank forwards, so that has also helped.
Do you think that's impacting demand at all?
Definitely. We've actually seen some demand flow from the interbank. It actually appears the market now sees a resistance at 165 levels. Like today, the market traded as high as 165.0515, then came back down. Market actually closed. Naira actually gained today, went as low as 164.30.40, then came back up a little bit. Right. So we actually seen the effect of the forwards, and as CBN is showing more commitment to defending the Naira, believe more investors will actually come in. And again, we still believe Nigerian assets are still, they're still very attractive.
Right.
We believe now is the time to go in, because we still believe very more in the 1-year Treasury bill, which actually traded at around 13.7, 13.6 today.
And the bond with 1 year to maturity is at about 14.
Yes. So the market is still, our assets are still, yes, our assets are still very attractive. What is actually driving, what actually drove the outflow we saw was the tapering and the like. So we still believe there's still going to be a lot of interest in Nigerian assets, because Naira is likely to remain a little bit stable in the short term, because you know, the obvious reasons, CBN is ready to defend the Naira at all costs.
All right,